Heikin Ashi is a type of candlestick charting technique, which clearly shows trend and reversals. Also, we can use it to measure the strength of the trend. Heikin Ashi chart will tell you whether to stay in the trade or take profit and get out. So trend traders can have a higher confidence when making decisions. The Heikin Ashi technique was created hundreds of years ago by a Japanese rice merchant, Mani Hisahama. He is also considered to be the father of the traditional Japanese candlestick chart. In this video, we will talk about everything you need to know about the Heikin Ashi charting technique and how to increase your winning rate and of course make more money. I will show you one of the most profitable trading strategy with multi-time frame Heikin Ashi charts and RSI. This strategy can be applied to forex trading, stock trading, and crypto trading. But we need to fully understand what the Heikin Ashi chart is and how to use it properly. If you want more videos like this, don't forget to subscribe and hit the bell icon to stay in touch with new uploads. It will help me to create more explanation and trading strategy videos in the future. Traditional Japanese candlestick charts frequently change from bullish to bearish, which can make them difficult to identify directional moves, trend, or reversals. Heikin Ashi candles display more consecutive colored candles, helping traders to identify past price movements more easily. Heikin Ashi candles stay green during an uptrend and stay red during a downtrend. Traditional Japanese candlesticks change color even in a strong uptrend or downtrend. Japanese candlestick bars start where the previous candlestick had closed. Look closely at the Heikin Ashi chart. You'll notice that every Heikin Ashi candlestick starts from the middle of the candlestick before it. A regular Japanese candlestick has 4 parts: open price, close price, high, and low. Also, Heikin Ashi candle has the seize price levels, but open and close values calculate differently. Let me explain this. The open of a Heikin Ashi candlestick equals the average of the previous candle's body. Open price plus the close price of the previous candle is divided by 2. The close of the Heikin Ashi candlestick equals the average value between open price, close price, high, and low of previous candle. The high is maximum price reached and low is minimum price reached of the period. Concept behind the Heikin Ashi candlesticks is to smooth the price action and reduce the market noise. You probably know a lot of regular Japanese candlesticks patterns: hammer, inverted hammer, doji, hanging man, engulfing, shooting star. But in Heikin Ashi, there's few type of candlesticks. Doji candles have a small body or no body at all. Bearish Heikin Ashi candles have no top wick, and bullish candles have no bottom wick. Some Heikin Ashi candles have both lower and upper wicks. I mentioned at the beginning of the video, there are 2 things we can identify using Heikin Ashi. 1. Trend direction, and the second, trend strength. How to use Heikin Ashi to identify trend direction. More green candles are showing that trend is up. Red candles are showing that the trend is going down. Green candles with no lower shadow signal a strong uptrend. Red candles with no upper shadow signal a strong downtrend. How to determine the strength of the trend. As you know, Heikin Ashi have shadows or wicks. If you're in a strong trend, Heikin Ashi candles indicate no wicks. In a strong trend, bullish Heikin Ashi candle has no lower wick, and bearish Heikin Ashi candle has no upper wick, or shorter wicks like this. If you see Heikin Ashi candles with no wicks or shorter wicks, it means you are in a strong trend. You can stay your long or short positions and let your profits run. Also, if you notice a doji or next candle changes color, it's a sign that the price might be about to change. If you're currently in a long or short position, you may want to exit. Now you know what is Heikin Ashi, difference between normal candlestick chart and Heikin Ashi chart, how to calculate Heikin Ashi candles, how do we use it to identify trend and the trend strength. There are also some disadvantages of Heikin Ashi. The main issue is, Heikin Ashi candlesticks do not show true prices. As you know, the Heikin Ashi candlesticks are averaged. They don't show the exact open and close prices for a particular time period. This is a traditional Japanese candlestick chart. The last candle's opening price is 1.3112 and close price is 1.3109. Left chart is the same, but Heikin Ashi candles. Open price is 1.3110 and close price is 1.31102. even though the Japanese candle is bearish, but Heikin Ashi stay bullish. This is important when you are trading with Heikin Ashi. Make sure you know what price you're looking at. You are in a long position and set stop loss at 10 pips, but the actual price is different than Heikin Ashi, so the trade will close earlier and give you a loss. This can be fixed easily by switching back to a regular Japanese candlestick chart or opening two charts at once. However, it takes some time to calculate and develop the trading plan. This isn't really an issue for longer-term traders, like swing traders or position traders, who have more time to let their trades develop. But it might be an issue for shorter-term traders, like day traders and scalpers. The sad truth is Heikin Ashi is not the holy grail. Most of the time it gives good signals, but sometimes you will get false signals too. But you can combine Heikin Ashi with other indicators and increase winning chances. I prefer to use Relative Strength Index with Heikin Ashi as a confirmation indicator. Sell when the current modified candle color changes from green to red and the RSI line crosses 50 level to below. Stop loss above the swing high. Two methods to exit the trade. 1. When RSI hits the oversold area, you can close the trade with profits. Second, the Heikin Ashi candle changes from bearish to bullish indicate the reversal or pause the current trend. This strategy is simple but powerful. Buy when the current modifies candle changes from bearish to bullish and the RSI line crosses 50 level to above. Stop loss below the swing low or whatever you prefer. Exit when the RSI indicator hit the overbought area or Heikin Ashi candle change bullish to bearish. This way you have additional confirmation with a momentum indicator. The second strategy is multi-time frame Heikin Ashi, using 3 time frames to find a good entry point. Daily time frame, 4-hour time frame with 14-period exponential moving average, and 1-hour time frame with RSI indicator. For buy order, previous daily Heikin Ashi candle should be bullish. In the same time, 4-hour candle should be above or crossing the 14-period EMA. If these two conditions are showing in the charts, you can find a long position in the 1-hour time frame using the previous strategy. RSI line is crossing above and Heikin Ashi candle is changing from bearish to bullish. Exit the trade when RSI hits the overbought area or the Heikin Ashi candle changes from bullish to bearish. For sell order, previous daily Heikin Ashi candle should be bearish. In the same time, 4-hour candle should be below or crossing down the 14-period EMA. Now you can find a short position in the 1-hour time frame. RSI indicator is crossing below and the Heikin Ashi candle is changing from bullish to bearish. Exit when the RSI hits the oversold area or the Heikin Ashi candle changes from bearish to bullish. I'll show you one more example as well as a failed setup. In order to place a buy order, the previous daily Heikin Ashi candle should be bullish. At the same time, the 4-hour candle must be above or cross the 14-period EMA. If these two circumstances show up in the charts, you may use the RSI strategy to find a long position in the 1-hour time frame. The RSI line has crossed above and the Heikin Ashi candle has changed from bearish to bullish. Exit the trade when the RSI reaches overbought area or the Heikin Ashi candle turns from bullish to bearish. In order to place a sell order, the previous daily Heikin Ashi candle should be bearish. At the same time, the 4-hour candle must be below or cross the 14-period EMA. If these two circumstances show up in the charts, you may use the RSI strategy to find a short position in the 1-hour time frame. The RSI line has crossed below and the Heikin Ashi candle has changed from bullish to bearish. Exit the trade when the RSI reaches oversold area or the Heikin Ashi candle turns from bearish to bullish. Let's look at an unsuccessful setup now. The longer trend has changed in the daily time frame and you should expect a buy order here, but the overall trend has shifted. To validate a medium trend, I use a 4-hour time frame, so the Heikin Ashi candle closed below the 14-period EMA. There is no trading here, thus you are secure from a significant loss. Let's take another example. The previous daily candle is bearish, and the 4-hour candle is below the EMA, so 2 time frames have verified the trade, but the RSI indicator is still above the middle 50 line in the 1-hour time frame. You are safe since there is no trading here. Be careful when high-impact news releases occur, because they have the potential to affect the daily trend. Check the news calendar before entering the trade. Another thing to remember is that you should never use more than 5% of your account balance for a single trade, and I recommend that you use no more than 2% of your account amount. Stick to 1 or 2 currency pairs because entry points can be found every day. Combine this technique with your own trading style, and trade with a demo account for at least a month. Share your results and positive or bad experiences with this method in the comments section below. If you learned something new and found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to stay in touch with new uploads. Share this video with others, and see you in the next video.